data out today says Kenya is planning to issue a $188 million 8-year infrastructure bond. What's the latest news on that?
I believe the Kenyan market on the fixed income segment has continually shown some very good growth, as it has been witnessed in the previous past. The rates are continuing to come down, and by the government giving us an infrastructure bond, which shares the same incentives like the previous infrastructure bond, I believe the bond will be picked up. There is still massive interest in the fixed income. Rates are still coming down, and we are still seeing some very big volumes in the secondary market trading. And I believe it's a good prospect. It shows the country is growing fast, pretty fast, and the people, the public, and also the foreigners are gaining some confidence in our market.
And how would you compare that? We saw the success of the 10-year Kenyan share as well as a Safaricom share, which caught investors' eye because of better priced than government paper. Now this one issues a 9.75 interest rate. How does it compete with the corporate bonds currently in the market?
You see, the only setback with regard to the corporate bonds is because of the poor returns they have been reporting previously. But I believe we've seen some confidence still in the secondary market trading in the corporate bonds. Some better volumes are reported this year than the previous years. So I believe, though steady, the corporate bond market is equally growing, though on the other hand, it can't compete with the government bonds, because government bonds are, the risk is slightly reduced, and also the, banks use it to borrow against the securities, like the horizontal repos and the vertical ones.
And how do you expect foreign investors to look at this particular issue?
There has been massive interest from the foreign market, as we've seen both in the equities as well as bonds. And I believe even in this infrastructure bond, the interest is still there. And actually, they're actually taking much more than the Kenyan public. So I think even for this infrastructure bond, we'll see some participation, big participation from the foreign markets.
Now with the foreign investors' interest also comes the fear of what we saw in the equities market, for instance, when they came in, and in 2008 when they took a mad exit, we saw the downturn of the equities market. Is this a fear that is shared on the bonds front as well?
Actually, it's a big fear we got, because we saw what happened with the Safaricom. And we don't have such a ruling in the fixed income market, whereby foreigners are supposed to take only a certain segment of the bonds issued. So the main concern is in case they come in a big way, then the market takes a U-turn, the rates start going up. We got fear that they might dump the bond, or it's a risk. But at the end of the day, we need to encourage them to stimulate our economic growth. But I think the central bank should address the issue of how much the foreigner should take in our market. The partaking in our market is just too big.
Talking about central bank, they retained the CBR rate at the last MPC meeting. There is an aggressive growth rate standing at 4%. Are the banks inspired enough to lend to the public to encourage growth in the economy? And how do you see the CBR rate going forward?
By the cut, which we saw late last year, actually in November, I don't think the effect has fully been assimilated into the economy, because we see the lending rates are still very high. But mainly this is because of some risk which banks usually experience in lending, like the political instability. Right now we are expecting some prospects. We are expecting to see how the constitution making will take off. So the banks might not react so fast to the CBR cuts, but we are hoping soon enough, as we draw away the fear, the CBR rate will have an effect on the commercial bank will be able to reduce on the lending rate to the public.